Okay, so in the last lesson or the last session, we went through the cash receipt journal, right? Understanding each um, each column on the journal and which amounts that which amounts go towards those column amounts, right? Now for a practical example, right? If you've had a bit of experience in this, you can just pause it here and then pause it here on the question and then attempt the question by yourself. And then if you do not have that much experience, you can just do this with me while I'm doing this and then go practice what you've seen here, right? So most of the things are just fairly straightforward. The date is the date, detail is the detail, reconciliation number. I guess this was supposed to be analysis of receipts. Just a second. Yeah, forgive me. I'm good at accounting and not spelling. Analysis of receipts. Alright, bit messy there, but we know what that is. Right, bank is bank, full amount. Sales, remember it's the VAT exclusive amount there, right? VAT exclusive amount. And then our VAT is not VAT input, it's supposed to be VAT output, right? Remember, when you sell, it's VAT output, and when you buy, it becomes VAT input. And then you have your trade receivables and your sundry account. There's also a mistake here, so this one will make this part here will make for amount, and then the one outside will just make it for the description, right? Bit messy, but at the end of the day, as long as you understand what we're doing, that's the whole point. So with the first transaction, right, we have date 3rd of May, received 4,600 from customer T Ndlovu in settlement of her account. Now understand, if someone is settling their account, that means they owed you at one point, and we know that the people that owe us, we call those our debtors, right? And we also know that, let me just zoom in to make my handwriting better. We also know that our debtors belong in the trade receivables account. Just gonna write trade receivables here. Right? So we have 4,600 received from customer T Ndlovu in settlement of our account. Now let's put that into the cash receipt journal. Start with the date. The date is May 3, January, February, March, April, May. Yeah, still old school. I'm still using my fingers. So 3 May 05. Details. You write the recipient's actual name. The person who's paying you his actual name. So here, T Ndlovu. Right? And then analysis of receipt. Now, they paying their account. She's paying her account. She doesn't get a receipt on that. Right? She's paying her account. She doesn't get a receipt on that. Remember, receipts we said is mainly for cash register roll. So we would say that 4,600 would go to bank, would not go to sales, because we're not selling. We sold to her before, right? So remember, the original transaction looked like this. The original transaction was trade receivables control, receivables. Okay, let me do this instead. Usually a sale is bank and sales, right? They give us money and then we add it to our sales, but in this case she bought on credit, so it's not bank, it's trade receivables control. Just gonna say trade receivables, and then sales stays as sales. Now what happens now? This was the original transaction here. This was the original transaction. That's when she incurred the debt, meaning that that's when she owed us. When she comes back now, what happens? It's no longer a sale, rather it's just her paying back the account. Bank gets debited, and then we decrease the amount of people who still owe us. We decrease our debtors. So the other account would be our trade receivables that it's going to get debited, credited, I mean receivables. Yeah, right, like that. So in this case, what we're recording is the payment, hence we have bank there and we have trade receivables 4,600. That's it. You've recorded the first transaction and everything's is great, right? Second transaction, May 6, cash sales of 11,500 including VAT were made, right? Here we would say, oh sorry about that, I don't know what happened there, right? Cash sales we know come from our cash register row. So here we're going to say if there was a file for doc, right, we would say CRR, cash register row, the date 6 May 0605, details, sales, right, because you sold something. Then remember now, if there is a cash register row, that means there's a till slip that came out, and if the customer gets a till slip, we as the business also have a recording of that very transaction, right? Think of it as at the end of the month, ShopRite sits down with all our till slips, everyone that has paid, that has bought something in the store, and they reconcile. Now they look at what is on the till slip and then they put it in the CRJ. So for them, they would have a lot of these, a lot. But because of technology, the beauty of technology, they don't have to do that. So yeah, so this is sales, and because of that till slip that was made to the customer when they bought, we're gonna add this 11,500 to our analysis of receipts, right? 11,500, right? And then remember, this is money coming into our bank account, so we're gonna have 11,500 here, and then we are going to have sales. Now sales is not 11,500. It is not that. Remember, we said sales is VAT exclusive. So always remember that sales is treated in this way. Bank is going to be the full amount. Let me zoom in. Bank is going to be the full amount, and then it's divided into two. It's divided into sales, which is the VAT exclusive amount. Right? And then it's divided into our VAT output, because we have to pay VAT on things that we buy, right? Things that we sell. The same way you as a customer, when you go buy goods, you pay VAT, right? That is a VAT input to you as the customer. And then to the business selling it to you, it's a VAT output. So in this case, we have 11,500, right? So we have 11,500. This amount is VAT inclusive. So what VAT inclusive means is that this amount includes the amount of VAT, right? For example, if we had an expense for 1,000 Rand and our VAT was 150, the VAT inclusive amount is 1,150, right? What we want to do is say that this 1,150 is the bank. The sales is the 1,000 Rand. And the VAT output is the 150. Right? Now, look at the previous video whereby I showed you how to calculate this and do it properly. But here I'm just going to skim through it real quick. So it's going to be 500 multiplied by 15 over 115. So here I'm trying to get the VAT output, right? Let me quickly access my calculator. So there we have 11,500 multiplied by 15 over 115, and that gives us 1,500, right? 1,500, that is our VAT output, 1,500. And then for sales, you can simply say 11,500 minus 1,500 equals to 10,000. Or you could also say 11,500 multiplied by 100 over 115 is equal, I don't know why the thing is looking so ugly, but yeah, is equal to, just give me a second, same amount, 10,000, right? Two methods, same answer, right? As long as you have the right answer. Then go back to our account. We have let me erase this. Sales we know is 10,000, so right there, 10,000. And then VAT output, we write our 1,500 rand. Just like that, you have recorded your sale, right? It's not that difficult. Just also remember that VAT output only works when you sell goods. Does not work with trade receivables, does not work directly with bank, and does not work with sundry account. You only pay VAT output when you have sold something, right? Again, think of the ShopRite idea. When you buy something at ShopRite, look at your till slip, there is VAT that is charged there. You as the customer, you pay VAT input. You're supposed to receive VAT input. VAT is a interesting one. But continuing, May 10 received a loan of 20,000 from ABC Bank, deposited directly into the business bank account. Now, loan, yes, is a liability. It is a liability, correct. But at this point in time, we are receiving it, right? It is that first day whereby we get the loan, right? And then after we've received that loan, when we start paying it back, that's when we have the liability and we like paying down the liability. But here in this initial moment, at this initial time, we've received the money, right? Think about it yourself. Also apply it to your personal scenario. If you go to the bank and you ask for a loan, you're gonna ask it, they approve it, then you receive, say, 10,000 into your account. That 10,000, the bank is gonna look at it as income, right? It's not gonna look at you still have to pay it back. They're just gonna look at it as an income. Now, to record this, we have the date, 10 May, right? And then the name of the bank, ABC Bank. ABC Bank, right? Then analysis of receipt, no, because there is no sale here. And then we have 20,000 bank, right? What else? Now remember, you have to place information into two columns, right? Look at this. The first one, we placed information in bank and trade receivables. Second one, we placed information in, watch now, bank, and then this sales and VAT output is considered one account. As I said, that it goes together, it's considered one account. And then the analysis of receipt is also there's a side thing, but it's not the main event, right? Now we have bank. What is the second account that gets affected? Now remember, we received a loan, so it should be loan from ABC Bank, but we don't see that heading here. Here we have sales, VAT output, trade receivables. It is not there. Remember, I said the sundry account is an everything else account. If you can't find the heading in these initial accounts here, then you take whatever transaction there is to the sundry account. So we're going to say 20,000 here. Then we're going to say loan from where? ABC Bank. That's what the sundry account is for, right? Moving on. May 14, sold all the equipment for 5,750 including VAT, right? I forgot to state this. Here it said including VAT. Here, there, again, including VAT, right? So, May 14, sold all the equipment for 5,750 including VAT. Money was received and banked, right? In this case, we will have the date 14 May 14 what is it called, 05. Then we can just say equipment or the name of the person that is buying from us. In this case, no one's name is mentioned there, so we'll just say equipment, right? Then in this case, as much as we sold it for equipment, remember equipment is not a day-to-day sale of ours, hence we can't say cash register roll. To put it again into perspective, ShopRite's daily stock, or the thing that they sell on a daily basis, is your bread, your eggs, all of that, your groceries, right? The day ShopRite sells one of their delivery trucks, it can't be considered part of the cash register roll. You with me? So hence we're not going to involve put it as part of our analysis of receipt. Instead, we're just going to say 5,750 as part of bank, and then the other part we're going to put in our sundry account as 5,750. Our reasoning there is going to be equipment, right? Now moving on to the last transaction. May 18, customer M Dube paid 3,450 in cash for a previous credit sale, right? This is the same as the previous one from in Glovo. You can pause here since you've seen the previous one, how it was done, without referring to it, without reversing the video. Just try to do it from the top of your head. Try to apply the thinking behind that, right? So firstly, date 18 May 05, the name M Dube, right? Analysis of receipt, no, we sold to them the first time, right? Remember this part, we sold to them initially, now they're just paying us back, right? So analysis of receipt was given the first time, now we're not giving them analysis of receipt. A receipt, I mean 3,450, right? And then it is trade receivables, they paying back 3,450, right? Now I want to touch on something else that is not in the activity. One last transaction that normally comes up here, right? Capital contribution. So here I'm going to say my name, Bongani Mahlangu, and let's say I contributed 10,000 in bank. And then once again, just like equipment, just like the loan, it is not part of sales, not part of VAT output, not part of trade receivables. So we take it to the everything else account, the sundry account, and we say there 10,000 Rand capital contribution. Now these should be practiced to you if you were not familiar with this was some practice for you to get used to this, and then hopefully you can go try sorry, it's running away from me, an activity whereby you can test yourself and see how well you do. But other than that, I hope that you are good.